Right, welcome. Thanks for joining me. Let's get straight into this. Trading breakouts. Okay, if you are day trading and you want to look at breakouts, you're not going to find it using smaller time frames. I think you need to start off with a bigger time frame and then scale down, and then use smaller time frames to gauge your entry. Okay, I mean, for example, the bigger, we had a breakout here, and this is the S&Ps, US indices. We had a breakout last week on the back of monthly US jobs. So how do you know if you've got a breakout? And if you have got a breakout, how do you handle it? Because even though this was a nice move here last Friday, you could still, if you don't know what you're doing, you could still actually end the day losing money. Because if you get in too fast, if you get in too high, and you get a deeper pullback, you'll end up just constantly trying to get in and out. You get chopped up, you can actually end up the day down. So we'll talk about two things in the next 30 minutes. Well, I'll talk about 20 minutes. And then I'll hand over to you for 10 minutes if you want to ask any questions. There's two aspects to trading big moves. One is a structural breakout during an ordinary week, and the other is trading data. So let's talk about trading data first, because we had non-farm payrolls on Friday. So you're looking at a 60-minute on the SPYs, the S&Ps. This goes for all the US indices, the Dow, the NASDAQ. It was all very, very similar patterns. And so this 60-minute is lined up in a certain way. In fact, when I was trading this breakout, I would have had this purple line at, let me just double check. Yeah, my purple line would have been right there. So we spent, that's the Friday close, the Friday night close, at the very end of the week. So we spent last week just pivoting around the Friday close. And you see I've got volume down here, but I've actually got trend lines on the volume, because you ain't going to have a breakout unless you've got volume. If you break out on very little volume, it's not going to go far. Well, it's not a breakout, but or you can get a spike higher on lower volume. For example, this little drop here was it's a higher than average volume here, but not great. But notice when this does break, you get a big, way above average spike on volume. And there's no way you're going to get a significant runner unless you've got that. And that goes for anything, any markets, any setups you've got. If you ain't got volume, then you're not going to get follow through. And you can see even this week so far, we started the week really well, but then we pulled right back into this support. At the moment, we're just shuffling around on this support. Volume, actually today, we've seen more volume on the downside than we have on the upside. So we're coming up on low volume here. So this is, at the moment, not sustainable. Anyway, breakouts. Trading data. Let's have a look at, I'm not going to show you my actual setup, but what I'm going to show you is the gist of what I'm doing. So let's go back to the Friday move. This is a 10-minute chart. Now, first thing is, do not chase the market. If you see a big spike to the upside, you can bet your bottom dollar a whole lot of novices will be jumping in trying to chase the market. Don't chase the market. If this market is going to do a proper break, you're going to get this pattern. You're going to get direction for the first period. You're going to get a pullback. Now, we'll talk about pullbacks in a minute, and then you're going to get the move. So that's wave number one, that's wave number two, wave number three. Anybody doesn't understand Elliott wave, I highly recommend you look into it, because this is an aspect of Elliott wave. I'm not even going to bother with that. I'm going into the market flat. So I'm not going into this data announcement with a position. I'm going to look for the direction, and then I'm going to wait for a pullback. Now, sometimes on oil, oil often does a 100% pullback. You'll get a spike higher, it'll go right back to the breakout, and then if it is going to go, it'll wind its way up again after that. Now that's a whole sort of different ball game. The indices don't tend to do a full pullback. They tend to do a 60% pullback. In this case, it was actually close. It was almost a full pullback, but it came back into this structure. You can see this support underneath it, the trendline support, resistance coming over it. We broke the resistance, pulled back. That resistance became support. So wave two ended here. A safer way to trade this is not to engage the market until you get confirmation that wave two is over and wave three is about to begin. Okay, so that's a data move, 1, 2, 3, and the wave three is normally on a good day it'll be twice the distance of wave one. That's why it's not worth chasing the market. It's not worth going into the market with a position, and it's not worth chasing the market. They're the two fundamental aspects of trading momentum markets, particularly on a volatile day like monthly jobs. Okay, so in the trading room, this is what we'll be looking for. We'll be standing back, twiddling our thumbs. You'll hear me prattle on about what I think's happening, but then I'll be announcing in the live trading room where I'm getting in. Okay, let me just look at where the confirmation is. So the confirmation on this 10-minute chart, I don't trade 10-minute charts, I'm just using this as an example. The confirmation is there on that bar. Let me look at the time for that. That was... So you get confirmation at 3 o'clock UK time. And the entry was 8:22, 38.22. The actual low of the day was only 22 points lower. See, that's why it's not worth chasing this market. It's not worth risking your capital chasing the market, because this is the actual trigger, the signal that is a high probability long is only 22 pips above the floor on that day, the low of the day. That's so, and you actually end the day, let's have a look, literally you end up with about 910. So you end up with about 90 pips. On a move like this, I would recommend you actually, if you get a nice clean setup, I would actually recommend you hold it right into the close. Not many people would do that. Not a lot of day traders. I don't know. Yeah, some day traders will only look for 10, 20 pips. Well, that's fine if you can make a profit out of 10, 20 pips day in, day out. But the easy way to trade these markets is just to stay out, and then stalk the markets and pick your spot. Right, let's have a look at yesterday's market, and let's draw down to where we are today. We put that purple bar back. Yeah, so look what we're doing today on a 10-minute chart. All we were doing this week so far. Also, we've got just under 3 hours before US closes today. So yesterday in the European session, in the London session, we came up and already started to come up on volume. But look at the volume. There's nothing there. That came up. That took hours, 2, 3, 4 hours to grind to 20, 30 pips. You get the market open, all this volume comes in, and then it's over and done with within, well, even within 60 minutes, you've got the biggest chunk of that trade. So that's my style of trading. It's to go after the main sort of section of the day and then walk away, because by the time about 60, 90 minutes into the session, it's all done and dusted. And look how it's come up on lower volume. So as the market's gone up, the volume's got lower and lower and lower. So once it gets to this top and it can't find any buyers, it goes all the way back down to the Friday close. And even overnight, it even goes underneath it. All right, so today, the trade today is, I'll come back on this, I'll answer my sort of title, how do you find breakouts? I'll do that in a minute. So today we've got the range of the markets. The open range is here. That's the first 10 minutes of today's market. So all we've done so far is opened up, pulled back into the London support. So you got London support down there. That's the overnight, and the London support was 38.76. And all we've done is from that 38.76 gone back to the open high at 39.05, 39.10 area. So I mean, that's a fairly typical day, just chopping around in quite a tight range. And the leading indicator here is not MACD, it's not RSI, it's not stochastics, it's volume. Because as you've come up here, okay, you've got a decent amount of volume on the open, but once you got past that initial 1, 2, 3, the volume's gone. So you're in the doldrums, and the chances of you making a breakout on this is slim. Okay, the Friday support is holding. So if we can, I think the next likely scenario is this will possibly go back to the Friday. If this is going to break out in the last hour of the session, I suspect it will drift back to that gap. And then if you get an increase in volume here, then I think you'll see that poke up and potentially maybe even go back to that 39.50. Okay, so breakouts are, if you've got data, they're about catching the third wave, not getting in front of the data. If you've not got data, but you've got volume, it's about measuring the open range. And if it's bullish and all the other aspects of the chart are holding up, then buy dips. Now, how can you stay the right side of the trend? You need to be very clear about what the daily chart's doing. This is where a lot of day traders go wrong. They have not spent the time looking at what the daily chart's telling them. So this is the structure I've got mapped out on the S&Ps here. We'll have a quick look at the FTSE in a minute. But we've got, okay, that is a bit too congested there. Let me get rid of some of these old lines now. Tell you what, I will, instead of getting rid of that, I'll just drag that back. Because that was relevant at the time. So, at the moment, we've got a market that is, on this particular market, it's had a very nice 5-wave move into that resistance. It's had a 3-wave corrective wave. At the moment, we're bottoming. So if we can hold this pattern and the volume can pick up, we could potentially go and see 4,000 this week. We're only 100 pips off that now anyway. And so this is buyable. If you've got a pattern that's holding, buy the dips and see if that you can get up to the next level of resistance. And you can see on this daily chart over here, we had, you can see I've got the trend line coming out on the volume. So when after this wave 1, you pull back to wave 2, the volume kicked in and you got a significant wave into the top of this trend line on the back of increased volume. All right, so my hot tips for you tonight is have your daily chart mapped out. Be very clear about what the volume is doing in that market. And let's put a moving average on there. Let's put the 20-day moving average. Yeah, any market that can hold the 20-day average, in my book, is buyable. At the moment, we are above the 20-day average. We're underneath it for the back end of December. But since we had this push higher on Friday, we are now above the 20-day average and likely to, at this stage, push higher. If we go under the 20-day average, then look for shorts. And you can see to the left of the chart, we were, in August, we were sitting above the 20-day average. We came underneath here on the Monday the 22nd. Every subsequent push higher was sold into until we got above the 20-day here on the 17th of October. Even when you're above it, we went immediately lower. So we were above it here on the Monday the 12th of September and closed immediately underneath it the very next day. Okay, so these are some fundamental rules to my trading, and then you might want to make them fundamental to your trading. So what else have we got? Let's have a look at the FTSE. I am short the FTSE. You can see from so I am short. This is a screenshot from my account. I got short on this level here. My stop's above here. At the point I took the screenshot, I was almost a couple £100 up, but I've just looked at it. It's actually since pulled back close to my entry point. But I'm sitting in this. I've got my stop up here above 77.50, and I'm going to see if this trend line resistance can hold, and see if I can get that to wind lower. We've got UK GDP on Friday, so I'm not sitting here thinking, oh, we've got GDP, the market's bound to drop. The reason why I am short is because we closed underneath this resistance yesterday, so I'm shorting pullbacks into that resistance, and that's all I'm doing. If you look at the 10-minute bar, you will see that we are getting lower highs and lower lows. So we are channeling lower on the 10-minute chart, and that is obviously clearer in there's a 3-hour chart. There's a 3-hour chart with a funnel pattern. So if we any pullbacks into this funnel, I'm shorting, and I'll stop shorting if we close above, obviously if I get stopped out. But I will yeah, that's a very good question. Thank you for that question. I'll come on to that in a minute. Anybody else got any other questions or wants to ask me something in the room, then just type it in and we'll sort it out. So, okay, so if we can stay out of this funnel pattern, and if this does trigger a push lower, then I am in position to profit from that. And for all the time we stay under these levels, I will continue to short. I think what I'm likely to do is keep this short position and then add to it. If so, for example, if this, so we've got lower highs here and lower lows. This is a 3-hour chart, you remember. So if we come out of here, I will take another position up there. If we drop lower, I will scale in and scale out and scale in on each wave to the downside, assuming we do roll over. For example, when this is taken out, you can see what this on the left-hand side of the screen in early December, this sold. So you could have had, you got some sell signals over there. I would be adding on these pullbacks. So I take a core position, add on the pullback, scale out, scale in, scale out, scale in, scale out, etc. And that's what I'm going to do if we get the same pattern over here. I'll be shorting any highs and taking some profit off the table. So basically, I'll have one position here, second position, scale out, scale in, scale out. But I'll hold this position throughout. That's just what, that's my particular style. You could go all in, all out, all in, all out. But there's no reason why you shouldn't. That's just my particular style. Right. Let's have a look at the cryptos, because cryptos I have been looking at cryptos. In November 21, for those of you who know me well, I suggested this was going to break down. And in November 21, we were way up there at 21,000, weren't we? No, sorry, 50 odd thousand, yeah. Yeah, here's November. So we were up there at 60, 69, 68, 69,000. I took a lot of stick from crypto followers up there on that shout. Abuse even at times, which it seems to be the normal thing these days. Anyway, yeah, we are coming up at the moment on lower volume. So if I tell you what, if we spike higher into that resistance, yeah, exactly. I took a lot of flack from people who were telling me it was going to go. I had people tell me, you don't know what you're talking about. It's going to 100,000. You do not know what you're talking about. Go away. And they use other words to describe my analysis. But anyway, yeah, thanks. So even at this stage, we've had capitulation here. I think even if we get another lower high up here, I think I think we need to wash down to about 10,000, possibly to 8,000. So I think these pullbacks are still at the moment still shortable. I tell you what though, unless this volume really picks up on the ups and we get some higher closes, I could be wrong if we start closing above here, this 20,000. I think this needs another plunge down to possibly as low as 8. I don't think this is done yet, but don't get me wrong. I think there's a good future for cryptos. It's just that you can't do anything with them. You physically can't do, well, you can, but you can't do a lot with cryptos. But this could be if I'm right about the FTSE, this is the kind of pattern you're going to see on the FTSE. See there, the real breakdown was there in April 22. Subsequent highs sold in April the 21st, 5th of May, 8th of June. All these highs kept selling. So that's the potential for the FTSE. Let's have a look at the FTSE. If this FTSE is going to this, I'll tell you what, if this does close, if this opens and closes up here, so if we close higher and then open and close above this 7,000, then we're going to potentially see 8,000. So I'm obviously going to stop calling the short, and just stop shorting, full stop. But if I'm right and this gives way, then we could have another pattern like the one we had here in June. So I think what happened there and what happened there could be what's about to happen there. Similar pattern there, similar pattern there. Let's see. And my short is at the moment not working. At the moment, it's not working. Yeah, that FTX crash has really scuppered a lot of the faith in cryptos. I think cryptos is like anything else. You need confidence in the market. I think for cryptos to really start to be mainstream, you need to have a reasonable amount of confidence in the market, and the practical side of cryptos needs to be more resolved, and blockchain needs to be more readily understood, etc., etc. So I think there's several steps before crypto becomes accepted in the markets. Right, let's have a look at oil. Let's have a look at oil today. Let's go back to a 10-minute chart. By the way, yeah, anybody want to ask me any questions? Oh, I've got 2 bars in there for some reason. I know what I've done. Let's take that top one out. Right, we have oil tends to kick off at 2 o'clock UK time. 2 o'clock today. We had there's the range for 2 o'clock. So the moment, we saw this plunge, and all we're doing at the moment is we've just gone back to the high of the open range. That's all we've done. You have got decent support down there. So you've got a breakout pattern there on oil. And notice how the volume really kicks in at that bar at 4:10 UK time. So you get a higher close off of this trend line support at 4 o'clock. It pulls back to 74.50, 55, and then you go to 76 on volume. But now we're up here. Notice how the volume is falling off again. So we've come up on low volume. All right. Okay, this is what I do in the room every week. Anybody wants to join me in the room? I've just sent you a link to the program. And then you could, once you come on the program, it's a 4.5-hour program. I'll give you all the setups, all the specifications, the templates, the journals, the trade plan, and then that fee takes you into my room for a month, every day for a month. All right, you can see the structure I've got here on the oil. It's under the 20-day average. So if you recall what I said earlier on, any market that's under the 20-day average, you short pullback highs. At the moment, so this is a different setup for me. We're above the 20-day average, but we're actually some distance away from the 20-day average on lower volume. So that's why the setup I've got there is a rejection of that 22 high. That's why I've shorted, just for your reference. Right, anybody got any questions? Anybody who wants to come to my free Monday night sessions, I'll give you a link to those as well. I do a complete review of the markets on a Monday evening. So you are welcome to join me for that as well. Otherwise, if you're interested or in that program, get in touch. There's a contact page on that website. If you want to have a chat about it, you're welcome. I will let me know when a good time to ring you. That's the Zoom link for Monday evenings if you're not already hooked up on that. Right. There's no more questions coming in. So let's have an update on where the S&Ps are. Yeah, still struggling with that open range. I'll just identify that open range bar for you. Yeah, so we shot up at the open. So you had a wave one, wave two took you back into the overnight support. Wave three is still holding up, but the volumes are pathetic. They are not. This market doesn't look as if it's got the oomph to go anywhere. Good question. Normally, yeah, normally you see them. If you go back to oil, you saw the increase in volume at support. And the same was the case on the example I gave you, the S&Ps on Friday. Once you get the confirmation, yeah, so that bar was right on that trend line support. Trend line support was drawn from the Monday late lows and the European lows. So once it came into those lows at 3:30 UK time, then so basically the institutions were stalking that price. They were putting orders in the book down at those lows. That's why you get the big volume spike. So the entry was 74.55, and then the resistance was 75.90. So you get there's 150 pips in it going back to the resistance. The logic, if you're looking to rationalize what is going on, it's very, very simple. Trading is nothing more support and resistance, and everyone was stalking that price. 74.20, 74.30 was a price that saw a big hike up in the European the London low. It's just a major support level. Is a good structural support for oil. So it's not a question of, and don't forget the market's driven by algorithms. It's got nothing to do with a retail trader at all. It's got nothing to do with retail trader. Retail traders have very little impact on these markets. Yeah, the few contracts that we buy and sell have no real bearing on the markets, unless you happen to have a very big multi-million account. These are institutions that are trying to buy the best price for their clients. So they're stalking these support levels, trying to see, or trying to get the best possible price for their clients. That's it. So if oil gets above 77 here, I think we should see 80 quite quickly and potentially 85 if this volume picks up and they hold it there. All right, thanks very much for your time. Thanks for your questions as well. Last chance to ask me anything. Otherwise, like I said, if you want to come in the trading room and join me, then and you want to find out some more details of that, then let me know. These Tuesday sessions are regular, so keep hold of that link. Watch out on your email for a reminder of the link at least 30 minutes before the we kick off on 6 o'clock on a Tuesday. Otherwise, have a great week. Yeah, enjoy your week and look forward to seeing you again. I will be holding some London events probably the end of the month. I'm just in the process of trying to set those up. Look out for those and have fun. Right, thanks again, and hope to see you again next week. Thanks, bye.